Every few months, the same headline shows up again. The dollar is finished. China is buying gold. BRICS is creating a new currency. Countries are trading without dollars. America's debt keeps exploding. The conclusion always seems obvious. The dollar's reign must be ending. Except, people have been saying exactly this for over 50 years. Back in the 1970s, when America abandoned the gold standard, experts predicted the dollar's collapse within a decade. In the 1980s, Japan's booming economy was supposed to challenge it. In the 2000s, the euro was going to replace it. After 2008, when the US financial system nearly collapsed, people said that was finally the end. And today, the dollar still sits at the center of almost every major financial transaction on Earth. Why? Because reserve currencies don't survive because they're perfect. They survive because replacing them is even harder than most people realize. Let's start with why everyone thinks the dollar's already dying, because the evidence people point to is genuinely real. It's just misunderstood. The US national debt just crossed levels that used to sound impossible. Trillions of dollars climbing every single year with no real plan to slow it down. The government runs a massive deficit, spending more than it collects in taxes year after year, regardless of which party controls Washington. BRICS nations, Brazil, Russia, India, China, and South Africa, keep talking about a shared currency, one that would supposedly bypass the dollar entirely for trade between member countries. Central banks around the world have been buying gold at record levels, especially China, quietly stacking reserves for years, month after month, without much fanfare. China has also been pushing its own currency, the yuan, in more and more trade deals, trying to settle payments directly without touching a dollar at any point in the transaction. And the US has used the dollar itself as a weapon, freezing entire countries out of the global financial system through sanctions, sometimes cutting them off almost instantly. Russia felt this directly after 2022, when a huge portion of its foreign reserves were frozen overnight. Put all of that together, and the story writes itself. Debt spiraling out of control, rivals building alternatives, sanctions pushing countries away from depending on America at all. It sounds like the perfect setup for collapse. But here's what that story consistently misses. Most people don't actually understand what a reserve currency really is. They think of the dollar as just money, something backed by the US government, valuable because America is powerful and has a big economy. That's not really it. That's not even the main reason. The dollar isn't just money. It's a network. Think about it like Visa. Visa isn't valuable because it prints little plastic cards. Visa is valuable because millions of merchants already accept it and billions of people already carry it in their wallets. The value comes from everyone else already using it. If a competitor showed up tomorrow with slightly better technology, that alone wouldn't matter much. Because merchants would still need a reason to switch, and customers would still need a reason to carry a new card. Or think about it like an operating system. Windows isn't dominant because it's objectively the best software ever written. It's dominant because nearly every program, every business workflow, every habit was built around it over decades. Switching means rebuilding everything from scratch, all at once, across millions of users simultaneously. The dollar works exactly the same way. It's strong specifically because the entire world already runs on it. Trade contracts, bank reserves, commodity pricing, loan agreements, corporate accounting systems. All built around one shared currency for the better part of a century now. Replacing that isn't like switching brands of soda. It's like trying to replace the entire operating system the global economy runs on, while it's still running without shutting anything down. So if it's not really about military power or oil, then what actually holds this whole system together? Here's the part almost nobody talks about, and it's genuinely the most important piece of this entire story. Dollar dominance isn't really about America's army. It's not really about oil either. Even though that specific story gets repeated constantly in casual conversation, the actual foundation is infrastructure. Boring, invisible, deeply unglamorous financial infrastructure. The US Treasury market is the single largest, most liquid bond market on Earth. Trillions of dollars worth of government bonds, tradable almost instantly, almost anywhere in the world, at almost any hour. If you're a central bank, a pension fund, or a major corporation sitting on billions of dollars, you need somewhere safe to park it. US Treasuries are that place because you can buy huge amounts and sell huge amounts without moving the price much at all. SWIFT, the messaging system banks use to move money internationally, runs primarily through dollar transactions. It's essentially the email system of global banking, and the dollar is the default language everyone writes in. The Eurodollar system, dollars held and traded outside the US entirely, keeps global banks functioning smoothly. Trillions of dollars sit in accounts outside America, used constantly for international trade, completely separate from the US banking system itself. The repo market lets banks borrow and lend cash overnight, using dollar assets as collateral, keeping the entire financial system liquid on a day-to-day basis. Without this market functioning smoothly, banks around the world would struggle to manage even routine daily cash needs. Foreign exchange swaps let institutions worldwide access dollars whenever they need them, almost instantly, even institutions that don't operate primarily in dollars at all. And clearing systems process all of this quietly, every single second of every single day, settling transactions behind the scenes that most people never think about. None of this is exciting. None of this makes headlines. But this is the actual machinery holding the dollar's position in place. It's not a flag. It's not an army. It's plumbing. Extremely deep, extremely difficult to replace plumbing, built up gradually since the end of World War II. So, could China actually step in and replace all of this? On paper, China looks like the obvious challenger. Second largest economy on Earth. Massive trade volume. Enormous foreign currency reserves. So why hasn't the yuan actually replaced the dollar, even partially, despite decades of trying? The first problem is capital controls. China restricts how freely money can flow in and out of the country for its own domestic economic reasons. A true reserve currency needs to move freely, instantly, anywhere in the world with no government approval required. The yuan simply doesn't work that way yet, and there's no clear sign that's changing anytime soon. The second problem is rule of law, and specifically predictability. Investors holding a reserve currency need genuine confidence that contracts get honored and that courts function independently of political pressure, even when politically inconvenient. Global investors don't have that same level of confidence in China's legal system, fairly or not, and that perception alone matters enormously in finance. The third problem is the exchange rate itself. China actively manages the yuan's value rather than letting global markets set it freely based on supply and demand. A reserve currency needs to float freely, so the rest of the world can trust its pricing reflects real economic conditions, not political decisions made behind closed doors. And the fourth problem is the bond market. China simply doesn't have anything close to the depth, liquidity, or accessibility of the US Treasury market. There's no place else on Earth where you can safely and instantly park trillions of dollars on short notice the way you can with US Treasuries. Chinese government bonds exist, but the market is far smaller, far less liquid, and far harder for foreign institutions to access freely. At the core, all of this comes down to trust. And right now, global trust in yuan-based infrastructure just isn't there yet at anywhere near the scale a true reserve currency requires. So if China can't do it alone, what about BRICS as a group instead? Could a shared BRICS currency solve this problem collectively? Here's a useful comparison worth sitting with. Building the euro took Europe decades of preparation. Countries with genuinely aligned economies, shared legal systems, deep political cooperation, and years of careful negotiation. And even after all of that, the euro still faces real structural problems today, with different countries pulling in different economic directions. Now picture BRICS trying to do the same thing, but faster and with far less alignment to begin with. Brazil, Russia, India, China, South Africa. Wildly different economies at wildly different stages of development. Different legal systems, different political interests, different relationships with the rest of the world. Some of these countries don't even fully trust each other on completely separate diplomatic and economic issues, let alone agree on how to jointly manage a shared currency. Creating one shared, genuinely trusted currency across that group isn't just difficult. It may realistically be closer to impossible, at least under current political and economic conditions. Even proposals for a BRICS currency so far have mostly stayed vague, symbolic gestures more than concrete, workable plans with real infrastructure behind them. So this is where the story actually takes a turn, and where it gets genuinely more interesting than a simple dollar collapse narrative. The dollar might not collapse anytime soon, but that doesn't mean everything is fine for America either. Being the world's reserve currency isn't purely a blessing. It's also, in a very real sense, a curse, one built into the system itself. There's an economic idea called the Triffin dilemma that explains this well, named after the economist who first identified the problem back in the 1960s. For the rest of the world to hold dollars as reserves, the United States has to run trade deficits, sending more dollars out into the world than it takes back in, year after year. That sounds fine in theory, almost like a strange kind of free lunch. But over decades, it means American manufacturing gradually shrinks, since it becomes cheaper to import goods from elsewhere than to produce them domestically at competitive prices. It also means America accumulates enormous debt, since maintaining that constant global dollar flow requires ongoing borrowing to sustain it. So, the very thing that makes the dollar powerful also quietly hollows out parts of the American economy underneath it, slowly, almost invisibly, over generations. It's not really a free benefit. It's a trade-off, one most people never see clearly, because the pain shows up gradually, spread out across decades rather than in one dramatic moment. Entire American industrial regions have felt this trade-off directly, watching manufacturing jobs decline for decades, even while the broader national economy kept growing on paper. So where does this actually leave us? The world may genuinely become somewhat less dependent on the dollar over time. That part seems reasonably likely, even probable, over a long enough horizon. But history suggests something surprising here, something worth remembering the next time a dramatic headline predicts imminent collapse. Reserve currencies rarely disappear because someone invents a better one. They disappear only after the existing system essentially destroys itself first, through some combination of war, exhaustion, or total economic collapse. The British pound didn't lose its position because another currency was simply better designed or more convenient. It lost that position after 2 devastating world wars, and total economic exhaustion left Britain physically unable to sustain the role any longer. That transition from pound to dollar took decades to fully complete, even after Britain's economic decline was already obvious to everyone involved. So the real question isn't really whether the dollar will eventually lose its dominance. Every reserve currency in recorded history eventually has, without a single exception so far. The real question is whether anyone is actually ready to replace it right now with something that can genuinely handle the scale, trust, and infrastructure the role demands. And right now, based on everything the infrastructure, the trust, the legal systems, and the depth of financial markets actually require, the honest answer is no, not yet. And based on everything currently on the table, not particularly soon either.